Hello and welcome to this new video. It's DC Capital. It's episode 7 of the series, and in this episode I will do a market review and the market outlook, and also I will speak about seasonal tendencies in the market outlook. This video will be the last one for the next 4 weeks because during August I will be on vacation and I will not upload any new videos. So the new videos are starting with the month of September. And with that being said, let's jump right into the weekly review for the last week of trading. Okay, this is Monday's trading for the micro E-mini S&P 500. Due to swing during London Open kill zone, price created a range, and with this move lower, it paired up the orders. Sell orders are becoming now market orders, and the early buyers are taking out. Orders are getting paired up. We can see that here. Quick rejection from that candle back into the range. And where's the next logical level for price to draw to? Buy side liquidity above short-term highs. We can take first partials here above this high or those relative equal highs. And finally, I was targeting this 5-minute fair value gap in the deep premium market. And also, we are buying below the New York midnight opening price, which is here. Price is obviously below that, and this is the high potential setup for Monday's trading during the London Open kill zone. This is Tuesday's trading for the ES, and on this day we can see that price is trading higher on this candle. Take out buy side liquidity, and from there price is trading lower with a bearish market structure shift here multiple times. And also notice that on Monday there has been a gap created, and that gap is acting as real support and resistance. And we can see that here price is trading higher, price is retracing back into this 15-minute fair value gap. And look at the rejection here on this candle. It is rejecting the low of the Monday's gap, and from there price is trading lower into a discount market, and it is seeking the 1-hour sell side liquidity to cover their shorts. Also notice time of day for profit taking. It's during the on-close orders time period from 3 p.m. to 4 p.m. And now let's jump right into the smaller time frames to get a better look and a more detailed look into the setup on this Tuesday. Okay, this is the 3-minute chart for the E-mini S&P 500. And here we can see the business. Those two gray lines here are delineating the Monday's gap. This orange line is the midnight opening price. And here again, you can see the buy side liquidity rate. Price is trading lower, it is retracing, and then aggressively trading lower with displacement. So here on this candle, there's the bearish market structure shift. And now we have to determine the PD array from this body to this body. This becomes the PD array. And here you can see the equilibrium price point. And we want to short the market, so we are looking to sell above equilibrium in a premium market based on the last swing high to a swing low in this PD array. There's a little fair value gap here at the low end of Monday's gap and at the midnight opening price. Remember, for shorts we want to short at or above the midnight opening price. And look how that candle is rejecting those two institutional reference points really quick, trading lower, and from there it is seeking sell side liquidity. One more time, building up relative equal lows, trade higher. Another fair value gap here is being created in a short-term premium market, and from there prices trading lower aggressively into the on-close orders time period. This is the next trading day. It's Wednesday, the middle of the week, and it's FOMC day, high impact news event. And first of all, I'm not interested in FOMC. Usually I don't trade FOMC, but if I'm trading FOMC, I'm waiting for price to hit the market. I'm waiting for big manipulations and to really create a damage in the marketplace, if you will. And usually a high probability trade setup will form after the big manipulation during the 3 p.m. to 4 p.m. time period. And what I'm looking is really the first 10 to 15 minutes after 3 p.m. And if no setup is forming there, I will not force anything. I will not trade anything there. And that's the reason why I didn't participate in this specific event. I stayed sidelines and didn't trade. But of course, you can see some annotations here on the chart. I outlined the Monday's gap here with those gray lines. You can see that here. And also there's a bullish 15-minute order block coupled with this Monday's gap acting as real support here. And if price would come down into this level, this would be interesting for me, but you can see obviously here that price never came down to mitigate this order block, and this makes this Wednesday a no trade day for me. This is Thursday's trading, and here you can see that price is being held in consolidation, and 8:30 news embargo hits the market. Price is trading lower, leaves relative equal lows here, and from there it is seeking short-term buy-side liquidity. And notice those relative equal highs here and here. What is above those relative equal highs? Yes, buy-side liquidity, buy stops. So this could be a potential target for price in the near future. And now look at the PA. Price is trading lower, taking out those relative equal lows. Price is mitigating this 5-minute fair value gap completely. And on this run lower, this is another sell side liquidity rate, Tudor swing after market open during the New York morning session. So we can buy into that sell stop rate and cover our long position above this high, above those relative equal highs with the first partial position, and then hold the trade for on close orders time period and close the full position during that time from 3 p.m. to 4 p.m. Notice as well that we are buying below the midnight opening price after the sell side liquidity has been rated. Okay, this is the last day of the week. It's Friday, and we're looking at the 5-minute chart of the micro E-mini S&P 500. This is a really clean setup. During the morning session, we can see that price rated the sell side liquidity pool on this move lower, and also price respected the low end of the 5-minute fair value gap. Here, look at the bodies of the candles. Almost all bodies are closing above this 5-minute fair value gap. And of course you can go back into your own charts and draw that 5-minute fair value gap here out in line. So you can see that here as well. Price created relative equal highs here and pushed through it, so there's a bullish market structure shift. Price is trading lower from there into a discount array. Price redelivered this buy side inefficiency here, this fair value gap, and at the same time price is at or below the midnight opening price, and we buy right here. Time of day is blended together with those specific institutional reference points, and this trade was being made during the morning session. And notice this is the extended morning session from 8:30 in the morning to 12 in the morning. Here you can see New York lunchtime, and here you can see the afternoon session from 1 p.m. to 4 p.m. On this particular setup, there are some possible scale-ins, and every time price is trading lower to mitigate a fair value gap, we can look for a scale-in pyramid approach entry 3 to 1 and taking price higher into a premium market to cover our longs and sell them back. That's it for this weekly review. I hope it was insightful for you. And now let's jump right into the market outlook for the upcoming trading week. Welcome to the market outlook. This is the daily chart for the micro E-mini S&P 500, and we finished this month of July with a up move, and usually during this time period the seasonal tendency turns to be bullish, and we expect the S&P 500 to rally until the end of the year, and this makes me really bullish. And my next logical level for price to draw to is this buy side liquidity here, but of course price can retrace into a discount market and to be accumulated at a lower price to finally seek that pool of buy side liquidity here. So always keep the market efficiency paradigm in mind. Okay, this is the US dollar index daily chart. We can see that price was rejecting that institutional resistance level here based on the weekly highs of the candles. Of course, you can check out that level on your own charts. Price is rejecting it, trades lower, and seeks the sell side liquidity in this buy side inefficiency in this fair value gap. My eye is here at the low end of this fair value gap. I want to see if the dollar is able to trade to this level, and usually during this time period the seasonal tendency for the US dollar is likely to decline. So I'm expecting lower prices for the US dollar, and this is making me bullish for the indices because they are negatively correlated. If the US dollar is trading lower, we are in a risk on environment, and we see the S&P 500 rallying, seeking buy side liquidity. With this being said, I will finish this video here. I wish you all a successful upcoming trading week. Thanks for watching. It's DC Capital.